Hello everyone. So this is a continuation from previous classes. Today we will be dealing with the double entry system for the asset of inventory, which is also known as stock of goods. So very important for you to remember a key rule as we go into this class. Remember that assets will always increase on the debit side of a T account and they will decrease on the credit side of any T account. This rule never changes, okay? No matter the transaction, assets will always increase on the debit side and they will decrease on the credit side. So remember that as we go throughout this chapter. Now, you will encounter new transactions in this particular chapter, but there are keywords that will help you out to identify the new transactions, because all the transactions will have the word or term goods, inventory, or stock of goods. So they will be very easy to identify. Keep that in mind as we go by in this chapter. Now, these are the 4 new T accounts or new accounts that you will be using, namely purchases, sales, returns inwards, and returns outwards. Those are the 4 T accounts that we will be using in this particular chapter. Keep in mind that these 4 accounts that you see here are all considered assets. Okay? Keep that in mind. They are all considered assets. If you recall from previous classes, we never open a T account with the name stock of goods or inventory. That's because it doesn't exist. So keep that in mind as we go by in this class, okay? And also remember that they are assets, okay? So what I'm trying to say right here is that the minute you open a T account with the name inventory or goods or stock of goods, rest assured that you are doing something wrong, okay? Once we talk about stock of goods or inventory, we need to use one of these 4 T accounts, okay? Now, to give you a simple example, let me give you a business that I want to start. So the name of my business is My Markers Store. So basically what I want to do here is I want to sell markers. That's the only thing I want to sell, and I want to keep it that simple so you guys understand the point of using those 4 T accounts that I mentioned earlier. So if I want to start a markers store, basically me selling markers to customers, first of all, I need to make sure that I have markers for my customers. At this point, I have no markers on the shelves, so I need to buy a few markers to sell to the general public. So what I will do is I will purchase a few markers. So let's say I get my first load of markers. Okay, so that's my first purchase of markers from my supplier. Okay, previously I had none, so I couldn't sell markers if I had no markers. So first I have to buy from a supplier, so I have to get as many as I think I will need to operate during the first few days of business. So I have purchased a few markers. So keep in mind that markers in this case is my stock of goods or inventory, because this is how I plan to make a profit from this business, by selling only markers. So markers represents my inventory in this case. So focus on the word inventory a lot if you really want to understand this particular chapter. So previously I had no markers, as I said. Now I have markers because I just purchased. Now, the markers, I could have purchased them in 2 ways. either on credit, which means that I did not pay for it, or I could have paid for them. So all of these, it's either on credit or by cash. Important thing is that I purchased goods. These represent my goods, okay? So you will only use the T account purchases if you are buying goods. That's the only instance whereby you will use purchases. Remember that the T account will always have the debit side on the left hand side and the credit side on the right hand side. So you will open a T account similar to this, except that this definition will not be there. Your title will be purchases. So every time you purchase goods, you will enter that purchase on the debit side. Of course, at this point, you know how to post. So you know you will need a date, a description, and an amount, right? But the idea is for you to identify which side do I use, okay? So every time you purchase more markers, you will post that particular transaction on the debit side of your T account purchases, okay? Now, let us say that after I take a look at the markers, after they were delivered, after I purchased them, okay? After I purchased them, I go over what I have, what I purchased. And looking at what I purchased, I noticed that there are a few things that I did not ask for. So I could have this, I could have this, and this. These things I did not order, okay? But they were included on the transaction I did there, okay? So these things I want to return because I am not in the business of selling pencils and pens. I am selling strictly markers only. So what I need to do is return these items right here, or this inventory, to the person who I purchased it from. So what I will do is that I will return these to that particular person, and I want you to focus right here, okay? So if I were to return these items right here, what would happen to the inventory here? My question is, would we have more inventory or less inventory? We would have less, right? Because previously we had all of this, and now because I am returning it, we have less. So if I were to count out, it's less that we have because of the return. And where is that inventory going? It's going out of my small business that I have here. Okay? Now, because it's going outwards, I am going to use a T account with the name. Let me just move this slightly here. I am going to use an account with the name return outwards because the inventory I am returning, it's going out of my business. Not because I am selling it, but because I am returning it because that's something that I did not order, okay? And because I have less inventory, which I explained to you, once I return this inventory, if I return this, I have less inventory on my shelves available for me to resell, right? So what is the effect on inventory? Keep in mind, inventory is an asset. This is also an asset, similar to purchases, okay? If I have less inventory, that means that I want to decrease my inventory, and I decrease any asset account by doing an entry on the credit side, okay? So once we use the return outwards, we need to record the transaction on the credit side. We use the return outwards for goods returned by the firm to its suppliers, which is what I explained to you earlier, okay? Keep in mind again that return outwards is an asset. What are we doing right here? We are decreasing inventory, and we are decreasing it on the credit side because we have less inventory, okay? And the only way we can decrease this account is by using the return outwards. How do I know when to use return outwards compared to return inwards? Well, as I said, I'm using this example, and I told you that we had all of this before, including what you see here, and this, but once I return, this will go out of my shelves. So I have less and it's going out. That's the reason why I use return outwards. Okay? Now, there are a couple more accounts that I want you to be able to use as well. Now, let's say that now I am happy with what I have here. Okay? I am happy with what I have here, and I believe I am at the point ready to start selling. So these are the items on my shelves. So the first customer comes in. And let's say that the first customer decides to take all of these markers. Okay? So I will sell these markers to the first customer. Okay, so they are gone because I sold them. So every time you sell inventory, you will use the account sales. Sales is used for the sale of goods. It must be goods, similar to the previous two accounts whereby you saw the word goods. So every time you sell goods, you will use this particular account with the name sales. And the sale, of course, can be on credit or they can pay you for it. Okay? So now, a few students confuse this because they might be tempted to do a debit entry because they will say, well, you just did a sale, so you have to debit because more sales. Well, think, again, let me return these markers right here. Think and look at what is happening to inventory. This is the inventory before the sale. If I sell these markers, what is happening to the inventory I had here? Is it more? Is it less? Well, it's less inventory. So if I want to decrease inventory because of a sale, I would like to do that. I must do it on the sales account and I must do it on the credit side because I have less inventory for sale. Again, keep in mind that inventory is an asset which includes sales, right? So that is why we do a credit entry on sales. Now, let's pretend that after that sale, the customer who took the markers realized that one of the markers was not working properly. So he would like to return one marker back to me. So if the customer is returning this marker to me, to our business, then this marker will need to come back here. Maybe not to the shelves, but it's coming back to the business. It's coming back inside, in. So that is a return considered as a return inwards. Okay? A return inwards. So what will be the effect of this return on my inventory? So that is what we had before. Now with the return, did the inventory go up or did it go down? Well, the inventory went up again, not because I sold, not because I purchased more, I'm sorry. It's because a customer returned to me, but still the effect is that we have more inventory. So what do we want to do to inventory? Do we want to increase that or do we want to decrease? Well, we want to increase it because we have more inventory. But we know, at this point, we know it's a return inwards. And I want to increase inventory, so I do that on the debit side of this particular T account, which is known as return inwards. Okay? So return inwards, when do we use it? We use it for goods returned by the firm. For goods returned to the firm by its customers. So these are returns. We will record the transactions on this side, the debit side, for returns made by our customers. So let me move this aside. So these are the four new T accounts that we will be using. Sales, purchases, return inwards, and return outwards. We will never open a T account with the name stock of goods or inventory because it doesn't exist. Now, you will notice that sales, for example, at this point, you could perhaps easily say that sales, you will do credit entries only. Purchases, debit entries. Return inwards, debit entries, and return outwards, credit entries. Many students memorize those things, but I do not recommend my students to memorize those rules. I like to use, that's the reason why I give students examples like the markers, for you to be able to identify what is happening to inventory. If you sell, you have less inventory. So if you sell, you know you will use the sales account. But will I debit or will I credit? Well, you have to think, do I have more inventory or do I have less? Well, you have less inventory, and if you want to record that on the sales account, you should record that on the sales account. You more than likely will do it on the sales account but on the credit side, because you want to decrease inventory. Similar, if you have these markers and you want to buy more markers because you're running low on inventory, then when you buy more inventory, when you buy more or purchase more, you will use the purchases account. Why will I debit? Because previously I only had these markers, but when I purchase, my inventory will go up again. Purchases is an asset account, so you want to increase that on the debit side. And you can use the same inventory I had here to understand return inwards and outwards. But to be honest with you, I will give you a different example next class, so perhaps you understand better if I use a different example, or two examples rather, if you take this into account as well. Now, to be able to determine if you understand, I have a few transactions that I would like us to analyze. I have these transactions, and I want you to pause the video for a few seconds here, and I want you to look at the transactions, determine what you would debit and what you would credit, and then you go over with me transaction by transaction. So pause the video, figure out what you will debit and what you will credit, and then you continue. So now that you have answers, let's go over transaction A. It says goods bought, cash being paid immediately. So for this particular transaction, we know that we are buying because of the word bought there. How are we buying? Well, we're paying cash for it. Okay, so we know that we need two T accounts. One must be a debit entry, the other one must be a credit. And if we know we're buying, we will use the purchases account. And when we buy goods, what is the effect on the inventory? Will I have more inventory or will I have less? Well, you will have more inventory, so we will need to debit purchases. What will I credit? How did I get the inventory? Of course, I purchased it, but did I pay for it? Do I owe that? Well, I paid for it, so I have less cash. So we would need to credit cash. The following transaction reads, goods bought on credit from E. Fabio. Again, we are buying goods. Okay? So if we're buying goods, we know that we will use purchases once again. When I buy goods, what is the effect on inventory in my particular business? Well, I will have more. This is an asset account, so I want to increase it. I increase that on the debit side. So I'm going to debit purchases. What will I credit? Well, how did I get the inventory? I got it on credit. From whom? From E. Fabio. So I'm going to credit E. Fabio. In this case, E. Fabio is a liability, and liabilities increase on the credit side, and that's exactly what we want to do. We want to credit this because we owe E. Fabio. Now, transaction C. goods sold on credit to C Grant. So here we are selling goods. Because we are selling goods or goods is involved, we know we need to use either purchases, sales, return inwards or outwards. But we see the word sold here, so we know sales will be used. So I'm going to use the sales account. Okay? Debit, credit entry. So sales will be used, definitely. What is the effect when I sell goods? When I sell some of my inventory, what will be the effect on inventory? Will I have more inventory or less inventory? Well, you will have less inventory, so you will need to do a credit entry on the sales T account. So sales will be credited. What will you debit? Well, you sold the inventory, or the sale was for C Grant, so immediately you know that C Grant will be debited. But let's understand why C Grant will be debited. Well, C Grant is considered an accounts receivable. An accounts receivable increase on the debit side, which is exactly what I want to do. Now, transaction D. Transaction D says goods sold for cash. In this case, again, we are selling, okay, so we have less inventory. So what will be the effect of a sale, specifically if it's goods, of course? Well, you will need to do a credit entry on the sales T account, like previously, right? Now, if I am selling goods for cash, then what is the effect of cash? Well, will we have more cash or less cash? Well, we will have more cash. So that's why we debit the cash T account. And lastly, a motor van sold for cash. Okay, let's do cash first. A motor van was sold for cash. Will the business have more cash or less cash? Well, the business will have more cash. So definitely we will need to debit cash. What will we credit? Well, it says sold, right? But we do not see the word goods. And because the word goods is missing, we definitely will not use purchases, sales, return inwards or outwards, because we do not see the word goods. So what did we sell and what we sold? A motor van. This is from the previous chapter. You cannot forget this. That's the reason why I include this, because you cannot forget about the previous chapter. We need to keep working with those particular transactions whereby we have liabilities and capital. So keep that in mind. The next class, I will use the other two T accounts, return inwards and outwards. And in addition to that, we will post. Okay, so very important that first we understand when to use sales, purchases, return inwards and outwards before we start posting. Before I start the other class, of course, I will give you a different example. So if you do not fully understand at this point, hopefully by the next class, you should be able to do so. Thank you, guys.